What's up, guys? Let's start with the charting session. So here, what happened at first is that we had CPI news, okay? And like I said, every time before an opening of a big, either a big news or the 9:30 open, you always want to look at the SMTs, okay? And right there we had a pre-market SMT with so pre-news SMT with ES, okay, at 8:30. So ES swept the London lows, and NQ didn't, okay. Also, we were kind of so high and in a super bullish trend that we knew that the chances of these highs, these stacked highs to get taken were way a lot more possible than going short immediately and then dip up, okay. So I was bullish on CPI. I actually thought the candle was going to print bullish. And here, okay, what I did on my Top Step account is that I always like to fade the moves once we start wicking the levels, some previous daily high or previous weekly high, okay. So this is such a big move in the market that you need a healthy pullback, okay. So you'll probably have, most of the time you'll have like the first move that is a manipulation, okay. You'll have some sort of pullback discount, and if price starts to dig deeper, then it will sweep sell side, and then we'll have a second distribution in the opposite direction. But most of the time it will still give you that type of you can definitely fade the move after a news, okay, for sure, once you hit a big liquidity level. So here I went on a daily, weekly, and there was your weekly high, okay. So here I saw that we had that weekly high here, and we swept it and started to reject it immediately, okay. So when I saw this fair value gap here, I took a super small stab at shorts, okay, here, targeting a little bit above discount of this range on my Top Step account. So boom, I was in shorts here and got out here, okay. I think I made like $500 to $600 on that trade. Only was in pretty small size here, but nice fade of the move to start the day. Then after, okay, let's keep going. I'm gonna show you guys the trades that you could have taken. So here, okay, we have, what do we have here? Okay, super important. We have another model that I keep showing you guys. It's the pre-market SMT model, okay. So here, okay, it's 9:30 open, okay, but at 9:30 open you can see here, if we go on the 1 minute chart, that ES was around this area, okay. So if at the open we NQ can't sweep that M30 high, okay, and creates a bearish SMT, okay, which it did exactly here, okay, you wait for a body closure, a bearish body closure, okay, to the downside, and you enter shorts knowing that the probabilities of the next candle to print bearish is more than printing bullish, okay. So exactly, look at this hour exactly, okay. So it was at 9:41 that the SMT happened, okay. So take a look at what's gonna happen here. So we had right there in that scenario, we had a double SMT. So ES swept the internal, NQ didn't, and while this happened, it also swept the external. So you had an SMT like this and an SMT like this, okay. So you had a double SMT. So what you could have done here is wait for that candle to close bearish strongly, okay, enter some shorts, but was not looking at the chart here, okay. Boom, enter shorts, tight stop above the high, and target all those stacked lows, and this you should put your stops to break even, take some partials here, and this would have been a really nice trade, okay. Super nice trade. What is this? It's a double SMT with the M30 high, okay. This high is the high formed between 8:30 and 8:59. Super important high here a lot of high probability trades in the initial balance. Okay, the first 30 minutes of the market open, a lot of volatility there. So SMTs have a lot of weight. Okay, so here did not take that. What I did there is that we had SMT. Yeah, we had SMT at this high. So for me, what I was looking at is that we swept this weekly high. Okay, swept this weekly high. Oh shit, I'm sorry. We swept this weekly high. Okay, and look at the close on the 1 hour. Okay, so we swept this one and this one. So boom, daily high. So here, boom. You go on the 1 hour, look at how we swept this high here, okay? And we closed back in the range. So this means that for me, if this next candle prints bearish, I will be a short targeting this low, okay? This is how I play. This is how I get my bias from. And my framework is purely based around candle closures and wicks. Wicks do the damage, body tells the story, sorry. So here, SMT at the high, okay? Sweep previous weekly high, close back in the range bearish. I know we're gonna target this. Okay, so then I scale back to a 5 minute. Okay, then first things first. Okay, if the price tapped this order block level, okay, I wouldn't have considered taking this exact trade that I took. Okay, but since it didn't and it stopped here, and I knew since the new candle would open, there was more probabilities of us digging into that low, taking that liquidity, tap that order block and that fair value gap to create a new high. Okay, this unfortunately did not happen. Okay, because what happened here is we made some sort of market structure shift here. Okay, we had our breaker, because once you have an SMT at this high, this whole leg becomes your breaker. Okay, so boom boom, so this whole thing here becomes the breaker. Okay, so what happens here, okay, is that I had a breaker and I also had a 5 minute fair value gap. Okay, so which is one of my entry models once I have a reversal pattern on the H1. Okay, I'm not looking to have the best possible entry ever on the when I'm looking at a reversal pattern on the H1, because I trust it so much, and I just want to get in the trade that has the like the best RR in this scenario. Okay, so we had our market structure shift. Okay, we had double SMT at the high. Okay, we swept the previous weekly high and rejected it. We swept it, closed back in the range bearish in that candle on that candle on the 1 hour. So for me, the real draw liquidity would be this low, and we needed this low in order to get up and find a new high. Okay, so I went in some shorts immediately there and got absolutely demolished. Okay, I got packed up and all good, you know. But you never want to question how you trade just because you took a loss. Okay, what the fuck? What is happening there? Sorry. So you never want to question your whole framework and your whole trading when you take a loss. Okay, this is purely a really good loss. I'm not gonna lie. This trade was way better than the first trade that I took, the second trade that I took. Okay, definitely. So keep in mind that what's up Mustafa, what's up plus EV Jimmy, shout out to y'all, man. Keep showing up. Shout out Berguven. I keep seeing you also, bro. Shout out to you, man. But yeah, here what happened exactly? So we swept, bro. What the fuck is happening right now? Let me think. My Wi-Fi is cooked right now. I don't know what's happening right now. I can't go to replay. But guys, this was the weekly high. Okay, previous weekly high. Okay, and since we swept the previous weekly high, okay, and I saw us rejecting like this on the 1 hour, as soon as I saw this candle close and we had that SMT, okay, it would be the same thing as if we swept it. Okay, so I know that as soon as this candle closes bearish, there's more probabilities of us going to sweep this low than us going to break this high without sweeping this low and tapping into that fair value gap in that order block. So this was my framework around the trade that I took. Okay, so here I ended up taking a loss. unlucky, but it's not because of this loss that I will change how I trade. Okay, losses. This is a super good loss. Super good loss. Did not start to push my stop loss above or did some dumb mistake. This was a super good loss. Okay, then super good concept that I have, and I took the second trade. This is my second trade. Okay, super important. So this was my first loss. Lost about $400 on that trade. Okay, not that much. All good. So here, what happened? Okay, what I keep telling you guys is if you disrespect the last gap in the whole range, okay, it's your first confirmation that you have your change in state of delivery, which means that this is your first confirmation that you traded so close to this high that the chances of you sweeping this high is higher than going back all the way to sell side. Okay, so what you're waiting for? Okay, you're waiting for once you disrespect this last gap in this whole range, you're waiting for a bearish manipulation to the downside, fill a 5-minute fair value gap, and once you fill that 5-minute fair value gap, because I will tell why it is a 5-minute fair value gap, but once you fill that 5-minute fair value gap, you wait for that inversion and then you stab longs. And this is exactly what I did. Boom, stab longs immediately here, and took out my profits at the second high here. Okay, entered 2 contracts, and here I entered only 1, so ate my fucking loser easily and made an extra $151 USD. Okay, let me just go here so you can see the execution. Okay, also on the PAs, boom. I don't know if y'all can let me see. Yeah, I think when the trading days is done you cannot see it anymore, but I have it on the Discord. I have it I have the pictures. Okay, so I took it there. You can see on trade recaps here, this was the trade that I took. Okay, so sell here, stopped right there, long here, and took out my second TP at the external high. Okay, super nice trade. It was not A+ at all, since we did not have a lot of confirmations that sellers were getting squeezed there. Okay, so we only had that candlestick pattern, which was the inversion, but I would have liked something that looked a little bit more like an inversion breaker with an order block, for example, and it would have gave me more confidence to go heavier on this trade. And also I would have liked that fair value gap to be a little bit bigger to have more confidence that these sellers are actually located exactly here. Okay, so why am I looking for a M5 fair value gap to hold there? Is because I'm targeting an external level of buy side. Sorry, if you're targeting an external level of buy side, a 1-minute fair value gap is not enough for you to distribute all the way to this buy side. Okay, you need a 5. So this is one of my rules when I target external. So here, boom, tap the 5, respected all those rules. And just to show you the exact model that I'm talking about, it's my third model on my pictures, and it's this one if you want to take a screenshot. Okay, it's CISD, higher time frame, M5 distribution. Okay, so it's you disrespect the last gap in the whole range, trade close to those highs, bearish manipulation to the downside, hold the M5 fair value gap. Why? Because you're trying to target those external highs. Once you inverse that gap, you long those equal highs. Okay, pretty straightforward model. Okay, here super clean trade. To be honest, this trade was way better than this one, not gonna lie, but there's nothing you can do about it. Okay, here, okay, was a nice 30-second model, guys. Just here, so you have 5, 10, 15, 20, 25, 30, so 30 minutes of accumulation, sweep inside a 5-minute gap. Okay, then you go back to this 30 seconds. Okay, 30-second chart, and you find that exact pattern. Guys, what I teach you is fucking real. Okay, you find either this pattern or this pattern. Okay, I'm showing you guys how to enter and how to exit and where you put your stop loss, everything. So here, this would have been the best entry. Boom, enter here, but I already made back the money. Took two wins on the day, since I shorted that CPI also. So here, easy trade to give you at least 10 handles. Okay, 1-to-1 risk reward. You don't need more than this. Super clean trade here on the 30-second. one of my favorite models intraday to scalp. Okay, nobody talks about it, but I will do. Here also, let me see here. We kind of had that another 30-second model here also, but I don't like when the price taps back into a 5-minute gap. So here you sweep a 5, 10, 15, 20, 25, 30, 35, at least an hour of accumulation, sweep, close back in the range. You know that you can grab a short for 10 handles here. Okay, so here we go back to the 30-second. What do you see? The same fucking pattern happening over and over again. This one, boom, 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 and you enter where? On that fair value gap. And as soon as you enter on that fair value gap, you will have 10 handles. Okay, really nice trade again here. If you took that, you're smart. If you didn't, take notes. Okay, like plus EV, man, I'm telling you, if you master this model right there, you will not be itching to put on a trade intraday. Okay, this is a super good model here that you can rely on. To be honest, I took out more than 8k, but with my brother only trading this strategy. Okay, not knowing anything else that I knew. One of the first models that I ever started making money with. Okay, here, let's see. Also, it just ripped the old day. So what you could have done also was try to take a long here. Okay, so here exactly. So this was aligning with your H1 bias. Okay, this is absolutely a super great H1 draw liquidity trade also. Okay, so why is that? H1 draw is higher, you're in a super big uptrend. Okay, you keep closing above the previous high. So here, what are you looking for? You're looking for a rate on liquidity, then a market structure shift, pull back to that fair value gap once you trade inside that H1 wick, and boom, you target that H1 draw. So here you had two models in confluence, so the 30-second and also that 1 minute drawn liquidity, 1 hour drawn liquidity trade. Okay, so let's see, on the 30-minute we had something, not really here. And here also you could have played that 30-minute reversal. Okay, so this is how I like to play them. The 30-minute reversal is a pattern that I like using. So here, for example, you swept. So here you swept this high here, and the low of the M30 was this one. Okay, so what you could have done is either, yeah, there was not really an entry here, but what I would have done is wait for the same exact pattern. So you have that 30-minute reversal, wait for something like, looks like this on the 1 minute, tap it and get to our draw. Okay, which is, could have been here. All right, really like this setup also, but not really any confirmations there. So here, the trades that you could have taken was the short here. Okay, CPI news release fade. Okay, to discount a little bit above discount of the range, just to grab a little scalp. You could have taken that double SMT here. Okay, so here you could have taken that double SMT short, boom. Okay, targeting this low. You could have taken that short, but we would have got spanked like I did. That long, two confluences on that long and that short. Okay, so here is 1, 2, 3, 4, 5, 6 trades and 1 loser, and I ended up taking that 1 loser. Okay, this will happen. Keep the same framework, it works. It just works. Okay, so here, just put that shit right there. SMT, pre-market, double SMT here. And yeah, so I'll take a screenshot there. It's pretty hard because the price action. Let me go on the 5 minute here. Could be better. Yeah, I have to take 2 pictures here. Fuck it. So here, my H1 drawn liquidity. And yeah, so these were the trades that you could have taken today. Super clean. I'm telling you, like I kept telling you guys that in summer it's gonna rip. It's gonna be trendy days, and I kept saying that to y'all. Okay, it will keep doing the same thing in June, July. It will keep ripping. Okay, and there's some things that I will tell you right there that you can do in your trading to have a super good edge. Okay, so let me just put it right there. Sorry. So boom. Okay, and this trade right here, which was the 30-second again. So all right, sorry for that. Okay, so on super trendy days like this, okay guys, I will give you a basic concept, but that is super important. Okay, is the daily wick. Okay, you need to understand in the daily candle. Okay, if you're ripping in the day, you're ripping, so you're breaking highs. Okay, if you're just doing this the whole day, okay, like this, like what we did, there's what you're doing the whole day is that you're sweeping the own high of the daily candle. Okay, it's fluctuating like this, so it goes from this high, boom, sweeps it, then increase the wick, then boom, increase the wick, then boom, increase the wick, then boom. Okay, but at a certain time, guys, okay, if at the end of the day the daily candle looks like this, okay, you will need to, every single candle on the daily looks like this. Okay, you need to create a up wick. Okay, and since you need to create that up wick, and you're currently trading inside of here, okay, for example, you're going to have a dip down at the end of the day. Okay, so you can take a trade, okay, in order for that daily candle to create the wick, okay, which was a little bit of this trade. Okay, this was the daily wick creation here. It's like 320 sweep, then you create kind of your daily wick here, 4 p.m. and then you look at the daily and your wick is created. Nice, super nice. Okay, this will happen every day during summer, during normal days. So guys, trust me on that. These are super good models, super good framework to use, and you will never be as consistent as you wish if you don't use higher time frame. Okay, never get funded, never pass accounts. You'll always fail to recognize the real draw on liquidity. Okay, so yeah, just kept longing and making money. This is exactly what you want to do. Just follow the H1 candle and you'll make money. Okay, I took the short and 3 longs. Yeah, nice. Super nice. I think I saw the trade you took, Mustafa. Good shit. Do you guys have any questions about anything? But or plus CV, if you have a question, tell me. Jimmy, anyone. This was not a bad day at all of price action. Okay, the thing is, you need to understand that trading this inside of this candle, okay, this H1 draw inside of this candle is still lower probability. I'm not gonna lie, it's not normal price action. Okay, since this is such a huge gap and we already pulled back to 61.8 of this range, it is still lower probability, and it's probably why my trade lost. Okay, but the framework behind it works. Kept working the whole day. Okay, so if you kept being a buyer here, for example, even here, we closed above the previous candle's high. So here, okay, would be your draw liquidity. Okay, so what you would do here is wait for the same fucking pattern to happen, which is your market structure shift. Okay, boom, inside that wick. And what do you have here? Same fucking shit. Okay, boom. Once you have that, you inverse that, and you have your inversion breaker. Sorry, you could have entered here easily on a 30-second for value gap inside of all this chop, or once you broke above this candle and closed above, super small risk here, boom, and here, so to target the H1 draw. These are all trades you could have taken today just by understanding where the draw liquidity is on the higher time frame. And man, this will change your life for sure, man. Like, once you understand that there's a manipulation towards the H1 high every single hourly close, your trading will change. Okay. Thank you guys. Thank you Tariq. Do you guys have any question? Spam questions right now. I'll answer. Okay. Anyone? Reshka. Anyone? Okay. So even here, sweep, close back in the range. You know that you're gonna have some sort of longs towards these highs. Okay. Easy. So this is how I look at the market. Even here on the reversal pattern on the 30-minute, sweeps, close back in the range. I know we're gonna draw towards this low. Okay, and you can take a trade once you trade inside that wick. Once you trade inside that wick and you have that pattern. So you're gonna be like this, and you have that pattern. Boom, you stab it, and this is your target. And yeah, price will probably shoot up after, but you took your scalp. This is scalping. This is high probability scalping. No question. Just need to practice my screen time. Yeah, just practice following the H1 draw, having conviction on where the market will close. Example here, we are in a bull trend. Okay, stop trying to short a 1 minute market structure shift. This is why people lose and blow their accounts. You're shorting inside a higher time frame retracement to a 15-minute gap and getting clapped. Okay, just follow the trend, follow what the H1 candle does, follow the bodies, follow the wicks, and it will tell you the story. Okay, there, took a loss, and I fucking fully do not care about this loss. Okay, yes, you would have probably said, okay, there was a 5-minute inversion there. Yes, there was. Okay, but you could have seen the market in two different ways. Okay, but I'm telling you, the way that I look at the market in the long term is the way. Okay, and today I was a loser on that trade. Still took two winners here. CPI fade. Did not take that, took that loss, took that inversion. So 2 and 1 today. Okay, and today I made trade recap. I made $473 on my Apex account, on my Top Step account, Express, and made $151 on my PA account on Apex. So not trading some demo money. Okay, not trading some demo money, real money, real funded accounts, and you'll see that I'll be positive. Okay, I'll be positive, and that's what you want. You want someone that will share you his account balance, will show you his stats, because if he doesn't, he probably blew 3 accounts before passing a trade. Okay, and yeah, so ask your question, guys, if you guys have any, or we'll just wrap it up here. So you find H1 bias. Yeah, bro, H1 and M30, if you understand this well, there's nothing more than that to scalping. Okay, you need a higher time frame magnet in order for those smaller time frames for value gaps to hold. Okay, if you're not aligning with the higher time frame order flow, you're cooked. Like this, you never know when a bullish for value gap will hold. You only know it when you have a higher time frame bias. Okay, so like this, I see that the close of the H1 is bullish. I'll just follow it. This is my target. I know that the chances of us sweeping this high, okay, I know the chances of us sweeping this high is higher. Even if the market would dump, it would still need that liquidity in order to shoot down. This is how I think about it. Okay, so yes, I am bullish, but if the market was to reverse, would it really reverse exactly here? Like, what are the chances of this high immediately to be the high that creates the whole fucking reversal? And if it does, I'll take the loser on that. I don't care, right? It will not happen that often. Okay, it will not happen that often, and you will have a clean trade here on the 1 minute or on the lower time frames. Okay, you want to take good losers. So yeah, this is really about it. So yeah, Jimmy, ask your question. I see you typing. But this is really the framework I use, man. This is the best framework in the game for sure. If you use the models also that I shared to you in the models, every single model here except for the CPI fade is in the PDF. Is in the PDF. Okay, so you could have won at least 5 trades today. I only check weekly and daily to look for liquidity pools that market might draw to. Okay, for example, like if we're so close to a high like this, for example, we're kind of making equal highs, have the same kind of bias. Like I know that the market is pretty efficient in some way that it does not like to put on poor highs. Okay, it likes to sweeps those highs. It likes to sweep those equal highs. Okay, and if I have equal highs like this on a daily, I know that if we open here and we create that bottom wick like this, which is the power of 3, during the day I can have a nice long, for example. Okay, but this was CPI. So this is how I got my bias from CPI. And yeah, so also guys, I'm gonna say that there's some good trades also in other pairs with the same exact framework. So here, for example, you go here on CL, you sweep the previous daily low and previous weekly low here, you draw back to 1 hour and you close back bullish. What is your draw? This high. Then you scale back to 5-minute chart. Okay, what do we have? We have a 5-minute breaker order block here and a 5-minute breaker block here. Okay, so here it's really nice, and you want to be a buyer inside that zone. So you draw back to 1 minute or a 2-minute chart to see if there's a fair value gap. Yes, there is a fair value gap here. I want to be a buyer. I have so much confluence that tells me that this level is more likely to hold than create a whole new low. Okay, and if price wants to come back to discount of this range, okay, then I'll restab once I have the chance and I got stopped out. That's it. And you just hold a little bit longer just to get back a little bit of profits after. This is how you do it. Okay, it works on CL, it even works on Bitcoin. Okay, man, Bitcoin is ripping, man. Alright, so if 1 hour high is taken and body closes above the previous high, okay, will John liquidity be the next high? Wait, so like I have two ways to look at the market when I look at the H1. There's either the continuation setup on the H1 or the reversal setup on the H1. So this is the continuation setup. Okay, so H1, it will close above the previous one. Okay, here, close above the previous H1 high. As soon as it opens here, okay, you will be putting on a low, and then once you trade back inside that wick, you long. Okay, this is your first thing. But the second thing, which is the reversal pattern, for example, on the bullish side, would be a candle like this. Okay, that sweeps the previous low and goes back in the range. This candle would be a bearish candle. Okay, you put in the low here and you sweep the low and you close back in the range. Okay, which means that the chances of you taking this high, okay, is super high. So what you're gonna do is that once you open here, you wait for that same exact pattern to come. So here, either you get a sweep before the candle even had the chance to close, and as soon as it closed, you have some sort of fair value gap, and boom. Okay, or you have some sort of structure like this on the M5. It went there, and as soon as it opens here, you stab the longs and take it. Okay, multiple entries that you can have. But this is the reversal pattern. This is the continuation pattern. This is basically how I find every single one of my trades in the chart. Okay, so was it clear? Was that clear, Rashka? So yeah, okay, so respect to y'all. Thank you guys for showing up, asking and showing up, man. I really appreciate you guys. Keep showing up in the live. You'll pick that shit up so quick you don't even know. Okay, you have great information in front of you. Maybe you don't realize, but people who went through a lot of shit in trading knows that what I'm saying right now is more valuable than any information you would have to pay for. Okay, so shout out to y'all. Keep showing up. Y'all make it. Y'all are gonna make it for sure. Okay, so thank you guys so much. See you guys on the live tomorrow. I will not be live I will probably not be live next week because I live trading is a little bit draining for sure. Fucks up with my mental, so I'll try to find a nice middle. Okay, probably trade 2 or 3 days on high probability days, and chill the next. Okay, so thank you guys so much. See you guys tomorrow. Peace.